The 79,000 broken. Huge candles. Everyone's selling. And what am I doing? I am observing why I've been seeing this for years. Same behavior. Repeat again and again, and there is something in this drop. That doesn't make sense to me. The volume does not accompany. The market already cleaned out the most leveraged, and I saw that it did not hold key levels with war, with tension in bonds and absolute fear in the market. That is not a broken market. That is a market that is preparing something. Today I am going to explain exactly what I see, what levels to watch, why everything I am going to explain to you this video fits perfectly with what is happening right now, and what would have to happen for me if I were to truly become bearish. Because this is going to be different from what you are seeing everywhere. I think one of the biggest problems that the people when analyzing markets try to simplify something extremely complex. Everyone looks for the easy explanation that if inflation rises, so Bitcoin goes down. That if it prints the money, then Bitcoin rises. If they lower rates, it's bullying. If the rates go up, it is bearish. And the reality is that the financial system, it works much deeper than all that. We have seen rate decreases with Big Ben falling. We have also seen inflation with assets decreasing. And we have seen, in the end, the market goes up with high rates because the financial system is much more complex and more dynamic. I have been paying more attention to the liquidity than in anything else. And watch out. I am not saying that technical analysis is not useful. Of course it works, and we will use it for example. But technical analysis by itself does not move the market. What moves the market are the financial conditions that allow that support or that resistances are broken. Because to break an important support, it requires real financial pressure. Stress is required. It is necessary for someone to have the need to sell. And that normally does not come just because it comes because that liquidity problems. Financing or balance. Is that why? When I see so many people convinced that it is coming, huge drop, I ask myself the following. Okay, but where is that structure or where is the liquidity break? Because for now I personally am not seeing, and yes, of course there are risks. The geopolitical situation is very delicate. We all know there can be, in bonds, violent marginal movements. Of course, that is not, I do not rule it out. But one thing is that there may be volatility. And another very different is that the financial system. And here is something I believe many people are not understanding at all. And the market has already because of a quite strong cleaning to more toxic many of the and more leveraged agents. Leveraged traders were expelled during the drops, previous ones, and that changes the conditions a lot. People are left only with the price. But I really focus, as you already know, in how the market reacts to extreme situations. We had war. We had tension. We had, I tell you, a lot of tension in bonds. A brutal tension in bonds. We also had absolute fear. And yet Bitcoin did not lose certain key levels. And that is extremely important to me. Because when an asset stops falling even with bad news, normally something is changing beneath the surface. Having said that, today we are seeing one of those movements that makes everyone nervous. Basically, precisely when the market moves quickly, when we see violent candles and it seems that everything breaks, is when it is most important to keep a cool head. As I always mention, a lot of people right now is seeing the loss of those $79,000. And automatically thinks the rise is ending. But I believe that we must understand how, where big money really moves. Because the price does not move by chance. You already know, behind every strong movement, is there intention, there are traps, and normally when the market seems, well, and it makes a movement too obvious, it usually happens precisely to provoke emotional reaction in the retail. To read this correctly, I use, you already know, fundamental tools. The first is the price action. We have support, resistances, zones where historically the price reacts, and the second, and for me even more important within the technical analysis that we are doing today, is the volume. Because volume shows us if there really is interest behind a movement, or if simply are manipulating the market to get people out of positions. Right now, in the 4-hour chart, as you can be observing on screen, there are very clear areas below. It's a very important area between $74,000 and $75,000. Then, well, it is a $79,000, which is a constant reference this week. And above, the next targets are the area from the $85,000. What surprise has not been that it is not just that Bitcoin has broken those $79,000, but the speed with which it has done it. We are seeing huge candles both upwards, like downwards, extremely aggressive movements. And that, it has a very clear reading from the liquidity point of view. Are basically looking for liquidity. They need to get impatient traders out of the market. They need to liquidate positions. They need to generate panic. And here is most fall into the trap. The retail reacts emotionally and sees a bearish break and sell just when probably. The strong hands are accumulating. That's why what's important, right? It's not just the fact that because Bitcoin has lost $79,000. The important thing is how has that break occurred? And the thing is when there's a lot of effort, when there's a lot of volume. We should therefore see a proportional reaction in the price. If a lot of money comes in and the price barely moves, something strange is happening. In this case, we have seen something interesting. The previous enormous candles they were accompanied by strong volume. There was, certain coherence. But that break, this specific break of $79,000 has practically arrived without interest. And that is exactly the liquidity outlook makes me think that maybe we are seeing the beginning of a strong decline, but rather a maneuver to sweep liquidity before continuing. This also fits with the logic of week off, highlighted in several videos. And the thing is that many people think that because they are simply boring sideways, but normally because before a strong impulse appears what causes spring, a false bearish structure, which seems very dangerous just before the movement, real bullish. And honestly, what we are seeing right now, it could fit perfectly with this behavior, a rapid bearish break-in. Weekend like we are right now, with less institutional participation, generating fear and subsequently recovery. That's why I right now I would not let myself be guided solely by the movement of the price. Weekend always has a different reading. In Bitcoin, there is less volume. We have less continuity, and the movements can be much more deceptive. The scenario I would monitor would be the following. The most likely is that Bitcoin returns to the area from the $79,000 mark for a retest from below. And that's where we are really going to discover the intentions of the market. Because if the price re-enters the channel, we are starting to see volume growing safely, healthily, in an orderly manner. So probably the market will want to continue to the city of $82,500. Now looking to the area of $85,000 and $85,000. They are still personally meaningful to me because a kind of magnet. The question is not, it's not as much about if it's going to reach, but rather how. How is it going to do? How it will lead, will drive the price to that area, and how many traps will occur along the way. And when we expand the perspective to the weekly chart, as you can see on the screen, all this still makes more sense. From my standpoint, we continue seeing a structure that, for me, still remains bullish. We had distribution months ago, then drop, large accumulation in the area of $60,000 to $72,000 in that range. And then the market started pushing again. Right now seems more. It's a technical pause within a larger movement, big that a total trend change. And yes, there can be more distribution later, especially, I tell you, close to $90,000. But for now, and as long as the liquidity system keeps functioning, while the repo also remains stable, and as long as intermediation continues to exist, I still see before $90,000 and $50,000, as I see many people commenting, and because it creates that it does not, because it creates so to speak, an infinite magical rise. Okay, not because I keep seeing a system that, despite all the uncertainty, continues to work, and the speeds keep relatively controlled. Financing is still alive, and the market absorbing tension without breaking. Can all this that I am telling you change tomorrow? Yes, there could be a terrible week. Of course Bitcoin can, for example, could have a strong drop. Of course, but as of today, and I want you to remember this, personally, being completely honest with all of you, I still do not see that structural break that would justify an absolutely catastrophic scenario. And I want to make something very clear. I am not wedded to a bullish narrative. If liquidity breaks, I will go bearish. It is like that because I do not follow the price. I follow financial conditions, and I believe that there's the difference between trying to guess candles and understanding how the market really works. And that's it for today's video and analysis. Right now, more than panicking, It's time to observe. Observe how the price reacts. Observe the volume. To observe if there really is a bearish intention, or if we are seeing another cleanup before continuing. Rising because Bitcoin, I already constantly leaves clues, and the problem is that the most only watch the movement, but do not understand the message behind it. This is not financial advice by any means. I simply share how I interpret the market. After years seeing exactly this type, behavior repeating over and over again. If you like the video, leave me a like, subscribe, and all you already know. Hope you are all very well. See you in the next video, Cool Mind. Oh, God.